Well. Today's the day. Today was that day. Today was that day. The reason why I say this, there's two reasons. The first reason was that yesterday was probably one of my worst days that I could ever have. Or not yesterday, Friday. Friday, we had one of our biggest losses ever in my trading history, ever. And it happened right before a weekend. So that just killed the whole mood for the weekend. I didn't want to do anything. I was literally just I was fucked up. I was very sad of that loss. But that showed me that I not only had emotions, and I was stuck to the money, but that also showed me that the trading or my trading can affect my fucking weekends. That's how bad it's gone. And that's bad. That's really bad. But luckily, we did some analysis that I'm extremely proud of to show you. That I will show you right here, right now. Boom, in the Discord. This was posted yesterday. So on what? Sunday. I said for SPX. So mind you this, by the way, I do analysis on SPX. I also do analysis on ES. You'll see here. But whatever I do on SPX is basically related to ES because ES basically follows SPX no matter what. So I'll do a little bit of analysis on SPX or on ES, but I'll do most of it on SPX. Okay. I said a hard spot to do high time frame analysis. I just said watching this balanced price range on the 1 hour. Let's look at the chart. SPX, you can see we're above that -4 standard deviation leg. We've hit that -4.5 or 4.25. I think it's the 4.25 standard deviation leg right here. As you can see, we just hit that. So what am I expecting? I'm expecting bearish price action. But I said for the moment, I'm bearish until we come down to my point of interest. You can see throughout the week, we are going to trade every single day. I mean, are we going to take a trade? I don't know. But all this news, there's very low news this week. Really nothing big happening. We did have ISM at 10 today, which I completely forgot about. It kind of fucked up a trade, but that also helped a lot with today's trade. But let's just take a look at this. Ready? Just from the chart here, because it looks a little cleaner, we have this black line in the middle. That is the the equilibrium of this current range on the 1 hour. So from this swing low to that swing high. The reason why I marked this range out is because, and this comes from experience, not only can I see this as a valid range because it reacted not only with SMTs, but with old highs, also fair value gaps and order blocks down here. And it had a reaction off of, I'm pretty sure this was Thursday's news or something, or Fridays. I think it was Fridays. And we had a very strong reaction off there. But we also had very bullish displacement, which hit that high up there, which creates the range. Equilibrium is down there. If we are looking to buy for, I guess, Monday, so, if we're here on Sundays for tomorrow, but if you're looking to buy for quote unquote Monday, you'd be looking for price to trade under this discount. Now, I did mess up a little bit, and I did say right under, I did for NQ, I said I'm also bullish for NQ. Now, NQ had a little different idea on the 1 hour, and this is the 3 hour, but on the 1 hour, it looked a little different. NQ had buy side liquidity sitting right above it, basically all-time highs. The -4 standard deviation still had not been hit. And this current 1 hour, I think this is a 1 hour to 3 hour market structure shift standard deviation. It only hit the -1 standard deviation leg on this one. So definitely was looking for NQ to go higher. Okay. Only problem is, remember, what did we see on SPX was that balanced price range. We didn't see that on NQ. And so what I said, I'm expecting SPX to follow NQ. So I was going to lead NQ on a leash. So if NQ spikes, not expecting SPX to trade lower, right? So if this spikes up right away, then SPX is not going to go under that discount. So that was the trade idea at first. I was like, okay, well, if NQ is already bullish, I want to see SPX not come down to this, because then that shows the SMT of a bearish divergence, which means that SPX is now leading above NQ, and now NQ has to follow, and that's not what I want to see. I said next target is buy side, whatever, right? Would like to see NQ drop under discount and close in / out of that hour 3 fair value gap. Let's see what happens. Let's actually go to NQ. I think, where was this? Oh, yeah, NQ, just NQ. Oh my goodness. Oh my goodness. What'd I say? Hold on. What'd I say? Would like to see NQ drop under discount and close in / out of the hour 3 fair value gap. I would like price to drop under discount and close either in or out of this hour 3 fair value gap. Well, isn't that great? Predicted the whole move. Yep, the whole thing. Yeah, the whole thing. Now, what I didn't predict is how far it would come down, okay? And this is where SPX comes in play. Let's go to the 1 hour on this. So let's just see one thing. You can see here on NQ, SPX, if you know SPX charts, there was a balanced price range right here. Like on SPX, it was like right here, for example. Not saying that's where it was, but that's what SPX had. NQ, as you can see, has just a big ass fucking bearish block, right? There's no fair value gaps, neither on the bearish nor the bullish side. So there's absolutely nothing here for us to target. So what did I have to do? I had to get off NQ and I had to go trade ES or SPX to see what they would do on their levels, if that makes sense. Because for NQ, all I had was levels up here for bullish, right? So I knew, yes, it would drop. And then the moment it would drop on the moment that price on NQ would drop under here, I would go to SPX. This is where it takes over. So NQ drops, SPX also drops, right? They're aligned. Now, SPX, there's two things it can do. There's a bullish fair value gap here, but this bullish fair value gap is also inside that 1 hour balanced price range. I believe that balanced price range is more likely to get hit and fully filled. But you can see that bullish fair value gap, that low is the same as that balanced price range. So yes, targeting this high and this low is perfectly fine. I just think that having the balanced price range is a little more refined and I like it better. Okay. Let's see. I'm pretty sure ES also had the same thing. Yep. On the 1 hour, as you can see, ES followed SPX. So we had that 1 hour balanced price range on ES, not NQ. And you can see that even though it didn't close in this balanced price range, to me, it's fine. At least it's respecting it. And the funny thing is, it comes under discount. ES is a very small range here, so it's pre-market, after market, very easy to drop under discount, super easy to do that, which meant that we could easily hit that balanced price range down here, which we did, easily hit that fair value gap, which we did. And what's funny enough is you can see on this fib, the 0.75 fib gets closed right on it. You can see the standard deviation. I'll talk about that in a second. Just wait. You can see that price point. You see that very low. No one can predict that low. I mean, maybe the fractals, whatever, but no one can enter a trade right on that low. But that's not what I was concerned. What I wanted to see personally was trading down and for a buy model to happen inside or outside, doesn't matter, this balanced price range. Most likely inside, or just I would like to see price come down and then come back and say, okay, I want to be bullish now, create a buy model, and then expand up. Now you might be thinking, okay, French, that's cool and all, but this usually happens, this was AM, PM. So AM, PM, what are you going to target? There's not that much volume. Price is not going to shoot up. It's a Monday. No one's buying, no one's selling. There was just huge bearish news at 10. What the fuck are you going to target? Well, let's talk about it. I'm going to stay on ES because this is where I took the trade. We'll talk about this in a second because this was the NQ trade. But what was I going to target? You can see that when price came down, it created this is what I called like a disordered? distorted buy model. The reason why it's distorted is because it's so expanded out, right? You have equal highs. You have a very low low down here that's trading way out of the balanced price range, which is not exactly what I love. But you can see it does create a buy model. And the entry was a little risky, I will admit, but it did work. It was like a textbook play, right? This was experience on experience. You can see these equal highs, so marked as a swing high. What I'm looking for is a intermediate term high. So let me pull back my thing here. Boom. Intermediate term high up here. Fair value gap, intermediate term high. That's what I like to see. I would like to see it break this liquidity, right? Which would be considered sell side or like internal sell side. Break internal sell side and then create that buy model. The only thing we'd want to see is these highs get cleared out. The first, or it does on this candle, the first fair value gap it creates on the, we're on the 5 minute, by the way. The first candle or the first fair value gap that it creates on this range to break out this market structure shift is this big ass fucking 5 minute. There are two things that went through my mind right now when I try to enter this trade. The first thing is I want to see a candle drop down to here. I don't want it to teleport. I just want to see it trade down. On the 1 minute it did. On the 5 minute it teleported. The only factor that led me to believe that this would go higher and not trade at the consequent encroachment was this doji. So I entered right on this doji when the candle closed because, and again, this is from experience, if, and I mean if price wanted to create a doji and trade lower to the consequent encroachment, I would still be in my entry position. I would scale in, but my stop loss would be a little lower, like to this low. So if it did want to trade lower and take me out here now, then I'd be out and then the trade would go. That's not good, right? Because usually I target down here on the consequent encroachment. You can see that didn't work at all. And I knew this was not going to work because of how bullish we just were. So I was like, let me get in or scale in as soon as possible. Stop loss right under that fair value gap. And if it wants to come down to that consequent encroachment, it can. But the moment I saw that doji, I was like, that is either an extremely bullish doji or an extremely bearish doji. Knowing the order flow, current order flow, the current buy model that just got created, I was confident in my position and I held it. Okay, so I scaled in. Didn't target lower. So that was that, right? On ES, it does look like a crazy trade, but when you really look at it, all we wanted to do was what? Buy back news. Where was that news candle? 10 a.m. right here. Where's the news candle high? Right here. I'm just going to mark the open or whatever. That's the first target that we were targeting. Okay. What does that line up with? Exactly. The 1.5, negative 1.5 standard deviation on this leg. So first of all, that tells me that's a good trade because the standard deviation lines up with the levels. Now, that's good. And then right above, what do we have? The 9:30 open candle, which gets targeted right after. Right now, the main target was actually the high of day. Now we created a new one, but at the time, the high day was right here. Pretty sure it was these highs. I'm pretty sure the high day was, yeah, these highs up here. Yeah. So those were my targets. If you can see my trade idea right here, I know I'm speaking a little too fast, but basically comes down into balance price range, comes under discount, so we can start buying. ES looks a little whack right here because it's a lot of discount, but you can see on SPX and NQ, it's just a tiny bit. Hits the balance price range on SPX, ES, and NQ, or I guess just SPX and ES. Creates a buy model, not only on ES, but NQ and SPX. And then we target not only news high, but then we trade higher and we target 9:30 open high. And then we trade all the way up to the high of day. The high day was like the final target. Original plan idea was up here, the negative 2.5. But when you're smart and you start realizing what the market actually wants to do, remember, this was what, 1 p.m.? This came up at 2:25. So I knew at 3, it would die down. The volume would be killed. And I knew that when this accumulation happened around here from like 12 to like 1 to 2, 12 to 2, this accumulation right here, I knew one thing and one thing only, that it would never reach that negative 2.5. It would only reach high of day to create either new high day or just tap it into it, and that would be it. That's exactly what I thought, And that's exactly what we targeted, okay? Now let's talk about this little trade here. So this is not demo trade. It didn't happen on ES, but I wanted to show you what I saw on ES that resembled on NQ, because I saw this on ES first, and then I went to NQ to trade it. Don't know why. Don't ask me why. I saw it on ES. Same idea. It's a sell model. This actually happened at 9:30-ish, I think. Yeah, this was literally 9:30. Yeah. 9:30. I don't know what the whole like model was, but I'm pretty sure. Yeah, I saw this. Like, there's a fair value gap here, reacts off of that, right? And then we get that strong sell, create that fair value gap. And the reason why is that there's a little fair value gap here. Now, the reason why it's not really good and it's not really a super good model to use is because the sell side not only happens literally at 9:30, which is probably the riskiest time to trade this model, but also this low here, this quote unquote market structure shift, isn't actually an internal or intermediate term low. So it's not, to me, it's not truly a market structure shift. You can still mark it out. You can see standard deviation does work out. And you can see that we tap right. This was the selling point for me, that fair value gap, when we tapped into the consequent encroachment. Boom. This was like an ICT like entry drill. This is like, you know what's gonna happen. Now look what happens when I drag this fair value gap into these candles. Just look at the consequent encroachment. Doesn't get traded above. Look at these candles. You might think that these close above. Nope. Nope. 1, 2, 3. And you know what? It never hits a fourth time, because a stock never does that. It never hits for a fourth time on the level. And if it does, it either breaks out or it rejects again. You can see third time the charm, and that's where we sell off. And you know what? You know why we hit that again third time? Because at 10, we had news, and 10 could either break out or reject. And that's exactly what we did. And then on NQ, you'll see, oh God, where is it? Oh God, I'm lost. Okay, this was it. On NQ, it was a little different. You see on NQ, this was the current trade idea here, right? Not as much confluence, but this is kind of what I saw on NQ. I was like, okay, high here, low here. It does kind of go, or actually, was this the low? This was like the mother low. So this is another swing low, but this is like the mother low just for the standard deviation. But you can see there's a tiny buy model or sell model that happens right here. You can see candle taps into that. Whoops. Candle taps into that and candle taps again. And then this sells off even before 10. So 10 happens here. But you can see on ES, you remember ES was trading like this. And 10 happened here, and then we dove, right? So ES was trading a little higher, and you can see NQ already had what? Already had dropped. What did that show me? That showed me that it was bearish. What does that say to my bias? That means my bias was right, because what did I ultimately say during the day? I said I want price to sell. So if it's currently bearish, that's good, because I want it under the discount. So when we fully go out of this fucking range and we drag this bitch out, which, oh God, I think I'm making a mistake. Where's my discount? Okay, why can I not see my fucking line? Oh, that's why, bro. I'm fucking stuck on that. Okay, that's the discount. And if we trade down, right, we trade down into what? The discount. What do we trade down into? The -4. Under the -4, anything under -4 for me, it would be considered a reversal. And if you really are paying attention to your standard deviation and you really used it how it's supposed to be used, you could mark out some levels, and you can know that these levels are used a lot, and then this is fucking crazy. And that from this level, we create a buy model. Yes, we do. And from this buy model, we do a good trade. This buy model was on the 5 minute. It's a little cleaner. First fair value gap that gets hit or created right off the bat is this little tiny motherfucker. You can see NQ didn't actually hit it. You can see that right there. It's alive. It's live right now. It didn't hit it. Now, sure, you might have missed this. That's cool. I mean, it really no big deal, but that hit that. What else? I'm trying to think because that hit on the 5 minute. What about the 1 minute? I didn't trade NQ on this. I only traded ES, but I'm trying to think because it also inversed this fair value gap, which you could have entered off of instead of this breakaway. Enter off the consequent encroachment, maybe. Yep. Oh, come on. Come on, my friend. Come on. Isn't that great? Consequent encroachment of that inverse fair value gap at the top of the range. Sure, that buy model didn't work, but hey, if you saw this on NQ and you want it to be a little less riskier, you'd hop onto ES and you'd see the buy model actually worked. Now, this could be vice versa. I could be locked on ES and not see this on NQ and miss it on NQ. Hey, that happens. It happens. We miss our entries. Blah, blah, blah. Let's just check one thing. I just want to check. Oh, NQ. Oh, wait, no, yeah, this was, I already said that. Yeah. Yeah, purple fair value gap was the 3 hour fair value gap here. Look at standard deviation on NQ, lines up also 10 a.m. candle here, doesn't line up with a -1, shows me that it actually wants to go higher on NQ. There's also like that these highs up here. Oh, wait a minute. You're telling me these highs that created the whole down range are now being what the fuck? ICT, what is this? ICT, what is this? You're telling me these highs up here are getting hit? These orders that are not getting filled up here are now getting filled up? No way. You're telling me that -1 standard deviation lines up with the level to the tick and rejects? That cannot be right. Stop it. That cannot be right. I will admit the standard deviation here on NQ is a little wild due to the actual target being up here. But if you remember, we were targeting what? High of day. Now this high day happened right up here. Boom. That was our ultimate target. And you can see if we do our thing and we enter of the consequent encroachment, it's not bearish, we're bullish. And we target high day, go all the way down here. And our stop loss was here or like maybe a tick down. You can see that this was a good ass trade. Right? Yes, yeah, same thing. I will show you something real quick. I'll show you my executions. There was a lot. Lots of executions. And that was due to the fact that I was on my funded and I fucked around a little bit. Let me see if I had executions here. Yeah. Okay. That's pretty much it. I mean, DXY, let's talk about DXY for just a second here because I don't have too much time. Let's see. Oh, no way. The power of 3, distribution, manipulation, distribution again, accumulation, distribution. Wait, accumulation, manipulation, distribution. Okay. Was kind of the power of 3. But, hey, look at this on DXY. DXY is doing something I really don't like. No, I'm joking. But what do we say? DXY pumps up. That means that we come down. Now, this is a little unexpected because I don't think DXY is very like off sometimes. Like this is just straight bullish. That means that we'd have to be super bearish for the whole day, even though we were not. Like it should have been up and then straight back down. You can see we didn't do that at all. So I don't really know what's going on with DXY. But DXY on the daily, you can see this monthly SIBI is what I'm going to be paying attention to now. Not only because it's a monthly fucking SIBI, okay? It's also very, very what's it called? Yeah, it's a monthly SIBI. So it's a big confluence. It also swept that buy side liquidity, and nonetheless, it is in this -2.5 to -2 standard deviation leg price action, whatever you want to call it, right? So right now, price, I can see it to do two things: trade just a tiny bit higher, to tad bit to that consequent encroachment of that monthly SIBI, and do something that we'd all expect, nice little doji, and then it come back down. What does this mean for the other indices? That means that if we're going up, 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 which I don't know how DXY is going up and NQ is still going up, but this just means one thing. That means that if we start going down and NQ starts respecting that, we're going to hit all-time highs all over again on NQ, ESPX, and ES. And we're going to go way and beyond NQ's fucking -4. We're going to go all the way to fucking -5, -6, whatever, if DXY is about to do what it's about to do on the monthly fucking SIBI. So as you can see, even on NQ, it's consolidating. I mean, you can just see this range. It's there's no trend. It's went sideways, and now we're just waiting for DXY to make its little move so we can decide where we want to go. Again, buy side liquidity right up here, -4 standard deviation. NQ needs to take it out if it wants to reverse. And that's it. That's all we're watching for. Again, we are extremely bullish for this week. I'm looking forward to, hopefully, I'm not trying to jinx it, hopefully pass my funded this week, if not next week. And I will let you guys updated. I'll let you guys update it. If you guys have not joined my Discord, please go ahead and do so. I give these fucking call outs like almost every day. I give these hopefully good predictions almost every day. And yeah, just it's a good environment. So join, link in bio. See you. Peace.